Okay, Chapter 4, Problem 1, Part 2, Multi-Step Income Statement. We're going to refer back to the same data we used for the single-step income statement, but now we're going to make a multi-step income statement, which is the GAAP preferred income statement. So our sales revenue is all we consider first. Remember, before we considered sales and interest revenue combined. So we start with our sales revenue of $2,550,000, but now we take out our cost of goods sold, which is $1,230,000, giving us a gross profit or a gross margin. You'll see those words used interchangeably of $1,320,000. FASB likes that detail in that order because that lets us know that we're at least pricing our product profitably. So it tells us that we made $1.3 million profit selling the item. Now let's see how much it cost us to sell it. So now we're going to put our operating expenses and we're going to put those all together. And we're grabbing the same exact numbers we did for the single step income statement. The difference is in the order. That's the only difference. Or the grouping, I guess I should say, not order. $340,000 selling, $170,000 general admin, and $240,000 inventory loss. Write down. That gives us total operating expenses of $750,000. And I want to point out to you that the big deal, according to FASB, are these subtotals. Okay, and these subtotals and their titles are important to FASB. And if they're important to FASB, they're important to us. So that gives us our operating income, gotta learn that term, $570,000. Now we'll add to that our rental revenue, which is sometimes simply called other revenue, of $84,000. And then we have a loss on sale of investments, $24,500. And we have interest expense, $83,000. So then we have another subtotal, total other operating income or expense, $23,500. So FASB likes that subtotal because it gives us the total information. Now we're going to go on and do the next piece, where we take the income before taxes and things. So what we're going to do is we're simply going to make this subtraction right here. We're going to subtract the other income and expense from operating income. And when we do that, we come up with $546,500. I'm hoping that number sounds familiar to you. And we have to come up with our income tax expense, which is 40% of that, which is $218,600. So our income before the extraordinary item is $327,900. Now remember, our extraordinary item, in this case it's a loss, is recorded net of tax. So the total loss, going back to our sheet, our trial balance, the total loss, 160. We're going to take 60% of that. That's the after tax, because we're subject to a 40% tax rate. So that's $96,000. So our net income is $231,900. And now we're going to do our earnings per share. We're going to take this $327,900 divide by the 300,000 shares, and our income before extraordinary item is $1.09. And now we're going to take this piece, the 96,000, divide that amongst our 300,000 shareholders, and we come up with this piece of a loss of 32 cents for net income or EPS of 77 cents. Now, as we're going through that, I was hoping that you had the I've seen that before experience. Well, let me show you the single step and the multi-step income statement. After you get from income from operations, it's exactly the same. So you need to make sure you're comfortable with the top part, the down to the income before income tax and extraordinary item. Actually, income before extraordinary item. Once you get to that piece, right there, everything else is exactly the same. Good overall review of income statements, both single step and multi-step.